What's going on, guys? You're here with Bo, and welcome to another video here with me at Cryptocurrency Australia. Now today we've got an interesting one. We're going to take a look at an article that has just come out in the past 24 hours. China is buying more and more gold as the trade war drags on. Now there's a lot to this. We're going to dive into this one and a few other articles to show some insights as to what is going on in China at the moment in relation to the People's Bank of China, the PBOC, buying gold, why they may be doing it, and the effects that this is having on the entire market and economy and flowing into cryptocurrency and potentially Bitcoin as well. So guys, stick around, stay tuned, and let's get into the video. Now welcome back, guys, and you are here with Bo Stoner, and thank you for tuning in to this video today. Now the first article we're going to look at is China is buying more and more gold as the trade war drags on. This one here is from Bloomberg. So getting into it, China has extended its gold buying spree, adding to reserves for a sixth straight month as the protracted trade war with the US hurts growth expectations and boosts demand for a portfolio diversifier. The People's Bank of China increased its bullion reserves to 61.61 million ounces in May from 61.10 million a month earlier, according to data released on Monday. In tonnage terms, that's a rise of 15.86 tonnes, after almost 58 tonnes of gold were added to the nation's stockpile in the 5 months to April. The rise reflects the government's determined diversification away from dollar assets. Argonaut Securities Asia Limited analyst Helen Lau said, adding that retail demand has also picked up. At this rate of accumulation, China could buy 150 tonnes in 2019, according to Lau. China, the world's top gold producer and consumer, is facing the prospect of a slowing domestic economy as the Trump administration raised tariffs on Chinese imports and looked to cut off companies such as Huawei Technologies Co. from the US market. The latest PBOC data signal that China has resumed buying at a steady pace after a pause from late 2016 to last December. It's a diversification away from the US dollar, particularly given the trade tensions and the potential technology Cold War that's evolving, said Bart Mellick, Global Head of Commodity Strategy at TD Securities. We have to remember that gold is nobody's liability. Bullion prices have risen for the past 3 weeks, hitting the highest level since April 2018. As investors seek out havens and traders increase bets that the Federal Reserve will cut interest rates following signs of weakness. Spot gold was at $1,329.60 on Monday, after climbing 1.7% in May. China has previously gone long periods without revealing increases in gold holdings. When the central bank announced a 57% jump in reserves to 53.3 million ounces in mid-2015, it was the first update in 6 years. The PBOC's move comes as other central banks, especially from emerging markets, increase bullion holdings. First quarter purchases were the highest in 6 years. Now, this is showing signs, we've talked about this before, how China, India, and Russia are all buying large amounts of gold. Their central banks are. And in doing so, and what you'll actually see here in this article where they talked about how it's the government's determined diversification away from dollar assets, to me, looks like they're offloading American dollars that they're holding in their treasuries in return for gold. Now, by doing so, essentially what they're doing is they're taking a commodity-based asset and de-risking themselves or decoupling themselves from the US dollar, given the global trade tensions that essentially the US is causing, and intentionally so, I believe. That's part of Trump's strategy. It's part of his administration's strategy, especially when you have the leverage of the US economy, which is absolutely booming. You can essentially dictate the policies that you want. And when Trump references how the US has been used economically for a long period of time, he's likely right in that. I don't think that's rhetoric. I think he's being honest. And what we're seeing is a pullback in these countries that are seeing an administration that is no longer being pushed around, and in fact is acting in the best interests of their citizens. So what China is doing is offloading the risk of holding US dollars and taking gold in as a result. But as we're going to see in the next article, this is having an interesting flow-on effect. Moving on. We have an article here from Zero Hedge that came out last Tuesday, the 5th of the 7th. Behind the recent crypto surge, Chinese banks are quietly running out of dollars. Cryptocurrencies have had a good run in recent weeks, as a sudden renewed demand has lifted all boats and taken Bitcoin back near $6,000 this morning. The catalyst has remained unclear. Anticipation of an ETF, growing institutional interest, short squeeze, manipulation, or just plain old safe haven flows as various nations around the world collapse into totalitarianism. We may have found one rather large answer from China, where, as SCMP reports, authorities have quietly begun soft capital controls on foreign currency withdrawals. And here we have a quote here. Chinese banks have increased their scrutiny of foreign currency withdrawals and quietly reduced the amount of US dollars people are allowed to withdraw, tightening the country's capital controls as the nearly year-long US-China trade war bites. The issue was thrust into the spotlight on Friday when a viral video showed a bank cashier unable to answer a furious customer demanding to know why she was not allowed to withdraw US $200 from her dollar-denominated account, even though she was within her quota. The client was so incensed by the refusal that she filmed the incident on her phone at the unidentified branch of China Merchants Bank. She also asked why the bank insisted she could only withdraw her US dollar savings by converting into yuan, the Chinese currency. The cashier seemed caught off guard, unable to address the woman's questions. It later emerged the woman had been placed on a watch list of customers making frequent withdrawals. So either Chinese banks are running out of dollars, scaring account holders into attempting to exit the country's financial system before a liquidity crisis, or Chinese officials are actively tightening capital controls, scaring the wealthy into various capital flight techniques as the trade war tensions escalate. And that's exactly what Bitcoin provides, is a safe haven for capital, given the sovereign nature of controlling the private keys. So interestingly, we're seeing really high level geopolitical moves and counter moves happening here, and the flow-on effect is investors and people holding assets looking for a safe haven, looking for somewhere to put their money, because ultimately these huge geopolitical moves affect the citizens within that country. They're the ones that really feel these kind of major moves. Moving on. Here is the article in question that Zero Hedge was actually referencing. Chinese banks quietly lower daily limit on foreign currency cash withdrawals. Lenders have reduced the scrutiny benchmark for US dollar withdrawals from $3,000 from $5,000 on the instructions of the central bank. Isn't that interesting? Central bank controls all the other banks, and this is the same case for just about every country in the world. It's a hierarchical system and goes all the way up to the World Bank and the International Monetary Fund. So this was published on the 3rd of May. Chinese banks have increased their scrutiny of foreign currency withdrawals and quietly reduced the amount of US dollars people are allowed to withdraw, tightening the country's capital controls as the nearly year-long US-China trade war bites. The issue was thrust into the spotlight on Friday, blah, blah, blah. We know about that. The clip did not identify the branch, but a senior official from another state bank said lenders were following the latest instructions from the People's Bank of China, the PBOC, the country's central bank. Scrolling down here. Previously, any withdrawals of US $5,000 or more in a single transaction required proof of need, such as an airline ticket for overseas travel or a health certificate for overseas medical care. Isn't that insane that you had to provide proof of need to withdraw your own money? That limit has been quietly lowered to $3,000, bankers confirmed, without wishing to be identified. China's currency is non-convertible on the foreign exchange markets because the country keeps its capital account closed. That allows the central bank's currency regulator to maintain the yuan's exchange rate within a tight range and to stem, essentially stop capital flight out of the country. So they're trying their best to keep money within China. According to the quota set by the regulator, Chinese citizens are allowed to exchange and withdraw up to US $50,000 per year in foreign currency, either in a lump sum or in installments. The written rules issued by the State Administration of Foreign Exchanges stipulate that for a deposit or withdrawal of foreign currency above the equivalent of US $10,000, banks shall ask to see ID, check it, and record all the relevant documents. However, in practice, the procedures are much more complicated. Now, when we move on just to have a look at some high-level statistics as to what is going on in China's economy, this starts to make things a little bit more clear, providing some context to these articles and these capital controls that the PBOC is imposing on China's national banks. So in the blue line, we have China's inflation rate. That is in percentages on the left-hand side of the graph here. And we can see that really since 2017, this was right about when Trump got in, right at late 2017, early 2018, China's inflation rate has grown and grown ever since. Very steep trend line. I would say that's between 35 to 40 degrees. These are due to things like the trade war, but ultimately, when you have huge tariffs, I believe what is happening is China is subsidizing, the Chinese government is subsidizing the 25% tariff imposed on the export of Chinese goods to the United States. And and the United States is pocketing that money. It's really a win-win for the United States strategically, because not only do they get to impose their economic will on an emerging superpower that they are in competition with, but they pocket massive amounts of money in doing so, and it also weakens the Chinese economy, because the Chinese government is subsidizing that 25% tariff, and they will do that for as long as they can to avoid companies in China fleeing China, setting up somewhere else, or even heading to the United States. So from a strategic perspective, it's a very clever move from the United States. Now in the black dotted line here, we have China's annual GDP growth rate, and as we can see, since early 2014, it's been on a decline, and it's hit its lowest point in a number of years as we move towards the middle to late 2019. So inflation going up, GDP going down. This is not looking good for China long term, which explains why people are trying to use US dollars where they can, and also explain why there could be some flight of capital coming out of China and potentially into Bitcoin as well. So it's very interesting times indeed. So guys, that's it for the video. That's an update on what's going on in China. I'm going to start bringing more of this political based stuff to the channel, because I actually really enjoy it, and I think much of it is very, very relevant to cryptocurrencies and Bitcoin, because there are so many mechanisms and so many influences that ultimately play into Bitcoin's use case and value proposition, right? So that's it for today's video, guys. I hope you liked it. If you did, the likes are always really appreciated. Only if you liked it. If you didn't like it, then you can give it a dislike too. That's cool. Let me know what you thought in the comments. Is there anything else going on in China economically that I don't know about, that I should know about? What do you think? If you're not subscribed, make sure to subscribe, come on board and join the Cryptocurrency Australia community. My name's Bo. Thanks so much for watching, guys, and I'll see you in the next video. Cheers.